Kirk Tuckwell here with Mastermind the Market, your real estate stats update for the Twin Cities area. Well, how have interest rates over the last year affected home sale prices? We'll dive into that in just a minute. But first, make sure you click on that like and subscribe button. And let's take a quick look to the current real estate stats here in the Twin Cities. All right, so looking at new listings coming into the marketplace, tracking a little bit ahead of last year, 3-month rolling average up about 6.1%. Pending sales, also ahead of last year, but just not at the same pace. That's up 4.7% on the 3 months average. You can see a big jump just a couple weeks ago at 11%. And then inventory of homes. So this is that opportunity out there for buyers. We're seeing that tracking ahead on the 3-month average, 7.3%. Okay, in comparison to the showing activity we're seeing out there, if we look at the 250 to 500K price point, the average showings per week per listing has been slowly coming down. So you can see here right after Memorial Weekend, 4.43. Well, now we're down to a 3.71. That's a threshold there. That's where buyers are going to notice a big difference in competitive showing activity while out there, while making offers. Now, sellers may look at this and go, oh, this is bad news. Well, it just means you need to make sure you're pricing appropriately for the current market conditions. If so, you can still have a competitive environment. This by far is not the lowest or slowest we get throughout the year. So you can still price appropriately and keep people coming in the door. So in comparison to last year, we're seeing that tracking down about 8% right now, and total showing activity is down a little bit as well. We were tracking ahead over about the last 2 months, but at this moment in time, we're down about 3% on that showing activity. Another notable point, because we're going to get to this here in a second, is the cancellation rate. We're seeing across the entire Twin Cities, all brokerages, that cancellation rate on the rise. But that's not a surprise either, as we watch days on market average coming off of their lows. We can see we're up to a days on market average of 24.8. Okay, so how is this affecting the marketplace? We're seeing inspections waived as more opportunities come up for buyers. That's dropping. Cash transactions coming in, that's down where buyers don't need to be as aggressive. Watching financing come into play a lot more. Average sale price and median price holding right around 100%, but closing cost contributions just about 30% of the time, and that's between usually 2 and 3% of the sale price of the home. So you can see how that might affect those numbers once factored in. Contingent on sale of a home, 11%. This is a one that's come down a lot. Escalation clauses down to 2% and appraisal gaps at 5%. And I mentioned that cancellation rate. Well, they're seeing it tracking, and by there, this is Home Free TC. Thank you so much for the data that you send out weekly for this, but they're seeing their cancellation rate only at about 2%. This is looking at the time period between June 1st and June 13th with 85 accepted contracts. I mentioned about the interest rates. We go back to 2022, we saw a big jump in interest rates over the course of that year, coming off these extremely historically low rates up into the higher rate environment that we've been in now for the last few years. So what impact has this had? Well, just take a quick look. We have been kind of bouncing around, got up to about 8% going back into October of 23, and we've seen it down getting close to 6% in September of 24. We were really hoping to be holding much closer to that 6% or high fives range by this point in time, but it has been having an impact on sale prices. We can see that as we are coming out of that lower rate environment where prices were consistently going up. Once we watched those interest rates kind of flatten out there, I shouldn't say exactly flat because we've been bouncing between 6 and 8, but much more stable over the last few years than that highly volatile 2022 timeframe. We watch those sale prices kind of level out as well. Little bounces, which end up usually being that time period of the spring market being taken into consideration, again, this is 12-month rolling average. If I go back to the monthly, we can see the same kind of trend playing out, right? We haven't seen massive growth in sale prices. We can go and look at 2022, 380, 2023, 383 as peak, 2024, 390 is peak, and this is median, and then 399.9 is peak. Okay, so we've seen a little growth there, but not as much as previously. So going back to that 12-month rolling average, I expect we're going to kind of hit that flat range again. On the monthly, that means it's moving back down, so creating some opportunity there for buyers. I think we're going to see more buyer opportunity than we did even last year. And there was a fair amount of options and ability to negotiate for buyers as the inventory picks up and peaks out in that August-September timeframe. So, and keep in mind, it's that late summer, early fall where buyers have 36% less competition per listing than in that peak spring market. So, yeah, you're going to have opportunity out there. If things have been tough, it's going to be getting better as the summer goes on. And again, for sellers, the key here, if you're coming onto the market, is just price competitively. We know based on the Improving Outcomes book I wrote and I've talked about a few times that the homes that price more competitively ultimately end up with the highest price per square foot sale price. And this was even looking at homes during that 2021 timeframe where every house was kind of going into multiple offers or close to everyone. And so the ones that priced lower, more competitively, actually netted the highest sale price, even though both of the sets of examples, I mean, I'm looking at hundreds of properties, both ended up going into multiple offers, both ended up for selling for more, but it was the ones that were more competitive that ended up netting the most. So you want to be taking that into consideration when taking that pricing into consideration and looking at those market movement stats right there, especially as the market is slowing down. So where do we sit on that Twin Cities market meter right now? 4.09. We're right on the edge of stable market heading towards that buyer's market range. Well, let's do it that way. Buyer's market range. All right. Hopefully, as always, you found this information valuable. You can always reach out with any questions. Take care. Have a good one.